Hi everyone, it's Tuesday, December 13th. When we got the inflation data out this morning, everything popped. Let's see if we can go to ESs and show that. We'll show the decline too. That's what happened on the ESs. It looks a little different than what happened on the SPY. 5 minutes. So there's where the ESs popped. That's right with some volume right about 8:30 a.m., about an hour before the market opened. And they went up pretty good. They went up all the way to almost the market open, almost till 9:30. And then once the market opened, they gave it up. So it's a little disappointing that everything didn't hold, but you got to also look at that was a pretty big jump. If we go back to the SPY, I mean the close yesterday on the S&P on the SPY was 398.95. So I'll call it 399 with an open of 410. That's a pretty big open. So I'm not saying nothing like that can hold. It just is what you think about like what happened here. Why didn't we hold it? Why did we sell? It could be a myriad of reasons. It could be a lot of reasons. The bulls just got a little bit too ahead of themselves. Shorts didn't really feel like covering, even though I think a lot of the shorts have already covered in general. Because remember, the chart that we're focusing on is this weekly chart on the S&P. Here's the high at the beginning of this year, end of last year. Run down to a low, lower high, lower low, lower high, lower low. Now you could question my thought process of this being the low here but look at this rundown into May. The retrace wasn't a retrace to anything special. I look at the retraces through the 21 EMA there on the 21 week one right there, the red line. That's your retrace. That's really not a retrace. I mean, you look at that as a higher high, then we looking okay. But any way you slice it, we got to get back over 431.73. That's the key, because there's your high. There's maybe a higher high, but that's a similar low. The next step, no matter which way you slice, it's got to be over that 431.73 to change this trend on this weekly chart. We've had a horrible 2022 with the markets. I mean, if you're looking from an investment perspective, but that's again with the numbers today, things should start to change a little bit. I mean, it's still inflation out there, but they basically say it's cooling a bit. You see on the daily here, got another kick up of the ADX line into buyers. The signal line looks like it's going to cross again on the MACD. So all these are backward-looking analytics. The key one is I just want to see the RSI stay above 50. So again, we're still searching for that, but I'm a little disappointed that we didn't hold on a little bit more. I'm not saying I'm a little disappointed in the red candle, but I mean an open of 410.22 all the way to a close of 402 almost, 401.97. You'd like to see a little bit more strength, but I mean, just one day, so we got to see where it takes us on the Qs. A very similar situation. We're trying to get above that 333.57 on that weekly chart right there. And we're not worried about as much as the IWM on the weekly, even though above this. Let's get this out of here. So low, low. Again, the key if you're looking at this on the small caps, got to give above 201.99 to change it. We're just trying to change this trend that's been going on for practically a whole year. So what are you looking to trade in these situations? I always ask that question of myself and ask you guys. You trade looking to, if you're going to go with the market, I mean, go with stocks that are going with the market. But we're looking for, for these medium term, short term trades, we're looking for something about this ready to move, whether it be with the market or without the market. The market really isn't moving dramatically. I mean, there was a dramatic move today, yes, but if you look at, like I said before, that November 9th candle that popped up, we're basically in that same range. That day was a close of 395 almost, 394 and a half, all the way to today we're at 402. This brought us a little bit out, but Not a whole lot of trending movement since that November 9th candle. So if you're looking to stay with the market, you got to be careful. Anything that's not ready to bust out or make a move to fill a gap, to break out to new highs, to break down to new lows, to bounce, anything that you got to be very careful if you're doing directional options, because if you're only holding, if you're getting anything, I like it at least 30 days out, even more. Even for a trade, I think that could start and end in about 2 or 3 days, maybe 4 or 5 days. I'm still looking for time. Um, so just be careful with what you're getting unless it's about to move. We got the squeeze uh, chart here, but we don't have a whole lot of squeezes on the SPY over the last 9 months. Got a 4 or 5.1 there. That bumped up a little bit, but again, the squeezes to the upside are going against the trend because the current trend is not really up. So let's get this out of here. So looking at Apple, that's really basically doing what the markets are doing. Actually, a little worse because there's the move on November 9th. That's actually November 10th for Apple, but same thing. It's actually well below where the markets are and the Qs are compared to the movements at the movement of Apple chart is a lot more bearish than the moves of the markets. Let me get Amazon in here. That's not performing very well either, but the move today looks a lot like the markets as well. Tesla, again, it looks like I said, where could this go? I mean, people love to short Tesla. I haven't, I'm not a big fan of shorts unless it's a real quick trade anyways, but I have this support here about 155. It's about 161. The low today was 156.91. It could run down to near that 1618. I'm looking at the support from this range in 2020. The low area of that range is about 116, 115. So down there. And you're looking also at the fib I have placed. It's holding up at that 155 area, which is that support, which was resistance here, and also the 1272 extension to that right there. So we'll see if that can hold that 155 area. It made it near there, the low today. And then Google will look at the weekly chart. Again, I think Google actually is better look on the daily, because if it can get back up above 105, or I'm sorry, 104, the area, that's 103.96 at the bottom of that range. Get back above there, it could probably do some decent things in the short term. Then we were looking at Netflix, trying to fill that gap from a while back. Still trying to get there. Like I said, a lot of people really got bearish, and deservedly so, on Netflix back in April. It hasn't really gone much lower since then. It's actually trying to trend back up. But just from a technical standpoint, take everything else out of the equation there. Let's go back to there's a big gap to fill. Okay, we've filled the gap a couple of times almost. If it pushes through that, because typically the psychology of this is, if anybody, again, a lot of people could have been in this. Again, remember, this is only April. We're talking, 7-8 months ago, yes, but anybody that got stuck there and is still holding on to it, like, okay, the psychological aspect of this is that, oh my gosh, I got my money back. At least almost got all my money back. Let's just get out and move on to something else. That's when you take a big hit on something. Obviously if you're just doing the stock, you take a big hit, you get your money back. You're like, okay, I'm going to get out and get into something else. But if it happens to push through there, see how people are just getting out as soon as it gets up there. If it happens to push through there, it can make a run. And we're looking at 396 is the next move above that 330 area, that gap fill. Then we were looking at Lowe's and Home Depot and some of these on weekly charts. And Lowe's try to push through that today. I'm looking at this as from a resistance. If it can push through 215, go to 238. Home Depot, almost the same, some very similar chart. Remember, these numbers to push through aren't like set in, these aren't exact numbers. This is an area, because we're looking at where it was. If it was at 333 up here, is it 333 here? It's been 333 here. Because go through there, it can maybe go up to 374, 375. And then Visa, same kind of chart. Been up at that 217, 218 area a few times here. You like these W type patterns. If it pushes through, you get from 217 maybe to 225, then looking at 236, 235, and then back up to 252. Remember, again, these aren't squeezes. These aren't going to expected to make a blast out move that you can trade in a few days. So be careful with, if you're doing directional options, be careful your expiration. And then we're looking at Goldman Sachs, couple banks here, and Bank of America. Look at these on a weekly chart. Yeah, that 380 level on Goldman Sachs seems to be key. It was generally supporting here. The area I saw it, and it was generally resistance here. If it can push through there, it can get back up to the recent highs at over 420. And BAC, very similar situation, except that's a little bit more gray area on the maybe 30, might be closer to 38. So if I just change this 36.94 to 38, that might make a little bit more sense there. And push through that general area, you can make a move back up to that 44 area. Again, these are all weekly charts, just showing you it's a little bit more difficult to see these resistance levels on this on these daily charts. Then we looked at talked about DocuSign last night. Just generally said, these are horrible looking charts, but I mean, if for a quick trade, you may be able to get something that has some momentum from an earnings report. Volume seemed to stay in today, but it looks like all today's move was basically in that the gap up. But this is not a chart you want to invest in, unless, buying at the lows, yeah, maybe. But where is this really going to recover everything that it lost from $300 down to 50? Maybe. But we're not investing. I'm going to say we don't invest on this site or with this. We don't talk about investing. We do, but we're just talking about trades right here. These are like a momentum trade. And we also said that the oil/energy stocks were hot. USO remained that way. Stocks like Halliburton. Let's see what PSX did. I'm just pulling a few out of my memory banks. PSX didn't have that green candle. Well, that's CVE. That's Synovus. I wanted Chevron, CVX. A little bit. Let's see if we look at the hot ones for today. Again, Docu was again up there. Halliburton was a leader. CVE was up there. Again, you got to look at the candles for today. Was most of the gain based on the gap up? That's what you got to look at. So do any of these, like I said, have any kind of merit going forward? Square is a horrible chart. Again, but a tradable situation on a quick term. You want to, if you're trading these on a quick move, these downward trending charts, try to take your time frame down to maybe an hour chart, a 30-minute chart, 30-minute candles. See what you can do out of that. That way you're not stuck on a whole day situation. So you see, you had some big movers, but you work your way down this chart. Maybe you had 25, 20 stocks, then you get up 2%. For a big day on the markets, there's a lot of green, but not a lot of big green. The big loser today was looks like the airlines taking a big beating. Delta and United all down. Tesla, like I said. The coin, what is this? Again, Coinbase, that's just taking a beating. Where was that? We had high up there, 370 down to 38. You see all the, just pause the screen and look at what was hot, what was not today. And none of these hot ones have great charts. When I do my research on Sundays, I usually take a look at them. I do take a look at every one of these charts. But let's see if we can get this, keep running on the indexes, especially the SPY. See if we can get up to that 431 area and change this trend on this weekly chart.